Welcome everybody to another episode of the People's Real Estate Podcast. Today we brought back on one of our favorite guests, Roberto Aleman. He is a lender with City Lending, and he's here today to talk about a new program. It's called Earned Equity, correct? Yeah, correct. Earned Equity. And he's here to talk about it and just share everything he knows about it. So stick around and find out more. So Roberto, how are you feeling?
Oh man, I'm super excited. I think that whenever something comes into the market that is going to be able to open a door for a new family to be able to become homeowners, it's a party.
Yes.
It has to be a party.
Yes.
So super stoked that that this program has finally been rolled out, and it is very similar to another program that we have, but this one has a lot more flexibility when it comes to certain things that have stopped other families from being able to become homeowners.
Okay, so just for the people, Roberto, tell us what is Earned Equity, what is the program, what are the qualifications, who is this program for, best suited for, and just give us the details.
Right. So this program is a how do we want to say this? Let's make any property. A rent to own property.
I was telling you how I want to market the program.
Correct. So that's I want to say it that way because I think that will help a lot of people understand where I'm going to go with it.
Yeah, so people can best understand. So it's kind of like yeah.
Let's do it. How you want to market?
Come up with the tag.
Well, so from what I understand, this program, right, Roberto, it allows the person to come in and basically lease with the option to own under a 10-year agreement.
Correct.
But what I love about it is it could be any property. So we get a lot of calls. Hey, do you guys have properties rent to own?
Yeah.
I'm thinking this is, I've been in the business about 8 years. I'm thinking this is maybe an old school thing, rent to own, because I don't see those opportunities anymore.
So about 20 years ago, we used to do a lot of installment contracts.
Okay.
So installment contracts was exactly that. And the reason that it made sense at that time is because we had an immense amount of properties that people couldn't qualify for. So they couldn't get a loan because either their credit wasn't there or they didn't have the money. So they were looking to rent. And so instead of property sitting in the market, the sellers were like, how about we do a contract and I apply X amount of your rent payment each month towards your down payment. So when you have accumulated enough, you're able to go ahead and purchase the property. And that contract had to be recorded in the courthouse for it to be something legal. So when they went to purchase the home, they were able to use that as your down payment.
Yeah.
So that's that's an old school thing.
Where it comes from. I guess where that stems from. Yeah, because we get a lot of calls. Hey, rent to own, rent to. I'm like, man, look, I don't know of any. If we hear of one, we'll let you know. But I don't know of any opportunities rent to own.
Yeah.
So you bring this program and you elaborate. But the way I perceive the program is like, man, this is for people that like, it's just a flexibility, the flexibility of home ownership, right?
Yeah.
So it's option, it's lease with the option to buy. And I say that it could be any house. That's the amazing part.
Right.
You find a house and the way they're going to do it for you is they're going to set you up 10 years. You're going to rent this house basically, right? With the option to buy. But the beautiful part is the equity, right? So let's say year 5. And this is where you were like, but who would want to do that? I'm like, man, there's people that are really flexible in life. Like, they don't want to be tied down to a 30-year mortgage, right? So, but they know buying a home is the right thing to do, right? So think about this. It's like, you come in, you rent the house for let's say 5 years. You have a career change. You have to leave to Arizona or whatever it is, right? I can literally just say, hey, I'm taking the equity with me. I'm out.
You sell it. Yeah. You sell your equity. Yeah.
Wow.
You see what I'm saying?
So the program in itself is a non-traditional mortgage where buyer comes in and we'll use the tax ID as an example. Borrower has a tax ID. They don't have the 20% down. And they rent, but they pay the rent in cash, for example. But it's an apartment complex. We'll use that as an example. But they don't trust banks or whatever, so they don't put the money in their bank. So they're like, I'm going to go cash my check and I'm going to go pay my rent. In the current program that we have available for tax ID clients, that wouldn't work because we don't see the rent being paid out of their bank accounts. On this program, it will allow us to do a verification directly with the management company, for example, and now we have the verification of rent done. So that simple rent issue that for us would be simple, for them was a door closing because they couldn't purchase the home because they didn't meet that particular guideline.
And that alone, I mean, I can't tell you how many times I think I brought a few your way, and it was that same issue that kind of delayed the process of them being able to qualify. It was they had everything perfect, the credit, the work history, W-2s and everything, and then it was okay. You haven't been paying in your bank statements your rent, and then
So when we create this, we're talking to the investor. And we're like, okay, we need to make it better than what we have right now. How can we do that? How will this work? Will that work? And so we begin to negotiate a lot of the guidelines for this program, and they agreed that that will make sense. Because some people simply don't like to do that. Okay, or let's say that we have a self-employed borrower who he pays his rent, but he doesn't. He writes everything off on his taxes. So he made $150,000, but
he spent $150,000,
300,000 miles on his car. He's like, I want to write all of that off.
Yeah.
Oh, by the way, I bought like 10 different, shoes or whatever, so he begins to expense everything out. By the end of the day, he's like, oh yeah, I made $5,000.
Yeah.
So that's his net income. So he couldn't qualify, right? Well, this program will allow him to do a year-to-date profit and loss that is supported by the last 3 months bank statements. So his CPA will prepare the profit and loss for example, right now it will be from January to September, and we'll have the last 3 months support the average income. So he's depositing equally that amount or more, and that makes sense. So that's a cash flow qualification.
Yeah, I mean the numbers gotta make sense. But you hear, but I mean, just to me, it's just phenomenal, bro. I just don't.
Yeah.
I'm thinking maybe I need to do that, bro. Because because think about it. If you find a good situation where already there's a little built-in equity, like the lady we were just talking about, right? The house just happened to have some equity built in. If you can find a situation like that, and I know the way houses are going right now, hopefully that trajectory keeps going. In a couple years, I'll have some equity. And I'm not tied down to the house. That's what I'm trying to tell you. I'm not tied down to a traditional 30-year mortgage. Now, let's say I love the house. I had kids in this house now, and now they love the house, and they don't want to give up that. I could buy the house. I have an option to go ahead and buy this house too. But if not, then I can take whatever amount of money this house has made me in the last couple of years, and I can take that with me, and I move on. Like that, to me, that's just an amazing option for someone that doesn't want to be tied down to a 30-year mortgage, you know what I mean? Because you still get the benefits. And you were saying they might even get the tax benefit on it too?
Right. So let's say that it's the opposite, right? And they use this program simply because there's no other way for them to qualify.
Okay.
And they want the 30-year traditional mortgage.
Okay.
They want this house from the get-go.
Yeah.
This program allows that because this program, what it is I'm going to give you a 10-year lease on this property, but you're going to have equitable title, which means that all the equity, that's what's earned equity, because you're earning the equity as you stay in this property and as long as you make your rent payment. But when you're making a payment, you're paying interest, because even though you have a lease, you're paying interest on the mortgage that the entity took out. So that legally you're paying it. So this is your home. You're buying the house. Don't think it's just a rental.
Yeah.
It's
The
your house.
the plan is for you to buy this
Right.
house. That's the
Exactly.
plan.
That's the end plan.
Kind of the best of both worlds.
That's what I'm
Exactly.
trying to tell you.
let's say I would like to. Let's say I'm using this program and I would like to buy. Let's say I fall in love with the house first year. Do I have to stay within the lease agreements for those 10 years, or can I refinance? Can I do
That's
something?
exactly where I was going because, thank you. Get segue into it. So, so let's say that, like you said, you fall in love with the house day one, and you're like, okay, I gotta, make the payments on time, make sure that my taxes are good, and as soon as the property has enough equity, you can go into traditional loan. You can refinance because now that equity is yours because you've earned it. That's therefore earned equity. So you earn that, And there's a memorandum that goes as part of the lease that is recorded in the courthouse that says that you are the sole owner of that equity. The entity you only own the entity whatever loan they took out. That's the loan they gave you. Okay, so let's say that the house was 300,000, and you put the 3.5% down, which is a requirement, and they give you a loan for the 293. That 7,000 is already your earned equity because that's the money you're putting into it, right? And each year the property goes up in value, and you're making payments, and that's reducing the principal. So you're gaining equity both ways, just like you'll be a homeowner. Yeah. The only difference is that you're in a 10-year contract to rent this property, okay? And at any given point in those 10 years, you can refinance, or like if Renee said, hey, I got to relocate, then you sell the property, and the equity comes back to you.
100% of the equity.
100%.
That's crazy. And then the people, people that, say someone's watching, they go, man, come on, man. Like, why would someone do that? Remember, these are nonprofits, right?
I'll be that skeptical person.
You'll play the devil's
Roberto,
advocate.
this sounds too good to be true. What are the cons of this? What's the catch, Roberto?
Well, really, there's no catch. You treat this like a regular loan. Like, from my point of view, I'm treating it as a regular loan. So if you come to me to purchase a house and I cannot qualify you in any traditional loan, I will give you this option. Okay. Why? Because you still got to put a down payment. You still got to pay closing costs, just like you would on any given loan, right? The good thing is, okay, so those are the things that you have to pay. What does it do for you? You own the house via the equitable title. You have the write-off. Okay, so they give you a letter at the end of the year of the interest that you pay, so you can do your taxes. Okay,
so very key.
Yeah, and at the end of the day, like Renee said, if you want to, move somewhere else, you can.
Or if you need
because there's no prepayment penalty on this particular loan. We have loans that have very similar characteristics that this loan does, but has a 3-year prepayment penalty. This one has no prepayment penalty, which is great.
Yeah.
The difference is that on this program, you can walk away from the house. Let's say that year 2 or 3, and you really don't want to stay in this house anymore. You want to move, and you have to move, and you didn't want to sell it. You can actually sign off your rights on the property.
Free and clear.
And you walk away from it. Now, you don't get the equity if you walk away from it like that.
That makes sense.
Or you can say, hey, you know what? I got to move. Let's sell the property. The program can either choose to sell the property outright, or they can buy you out. And then they sell the property.
And I, me, man, I'm about keeping it real, right? Keeping it straight. So the way I see it, people, if you're out there, the way I'm hearing it, Roberto, is that's why he said, listen to what he said. He said non-traditional, right? Because the regular traditional mortgage is going to need for you to have your shit in order, basically, right? But I know, man, look, it's 2023. It's about hustling. You know what I mean? It's all kinds of stuff going out here. So sometimes, let's say, who is this for? This is probably, in my opinion, this is for the business owner, right? That sees money coming in, right? Or the person that works something that's 1099, right? That money's coming in, but maybe let's be honest, this is just the year you haven't got your stuff together. You haven't filed taxes for some reason. You know what I mean? Whatever it is, right? But at the end of the day, you have to live somewhere, right? And you got the money. Money's really coming in. It's just that you're in a position you're not too organized. You know what I mean? You're at the beginning stages of your business. Who knows what it is, right? So this is a non-traditional way for you to achieve home ownership, because you're not going to qualify. Let's say, you're a young person. You have a good business going. You do your taxes. Everything's good. But most people are going to say, well, show us how you pay your rent. And you go, well, I just sell it to the dude, or hey, I give him cash. He told me to give him cash. Boom, you can't do traditional stuff no more. Even though you had 780 credit score, you had everything in order. That factor right there is probably going to disqualify you for getting a traditional loan, right? But you're still a good guy. You still make good money, and you understand home ownership is very important because you over time you amass equity, and there's benefits to it, like the tax, the interest tax write off every year.
Yeah.
So you understand these things, but you're like, man, but how can I achieve it? Because my life right now, it just doesn't allow for it. You know what I mean? I can start giving this guy Zelle payments, and then there'll be a record of it. But the bank wants to see a year, 2 years of this stuff. So, but I need a house now. You see what I'm saying? So it's all, I'm just, those are just two little situations. There's people in all kinds of situations, stuff I can't even imagine, but they make good money. They have solid credit scores, you know what I mean? And they understand the value in home ownership. But right now, they can't qualify for a traditional mortgage. This is an option. You see what I'm saying? And that's kind of how I see this being, you know what I mean? Like, who does it apply to? Like we were asking, right?
I think this is huge. This is revolutionary.
Yeah, that's how I see it, man. Like they're getting creative, bro.
This is revolutionary because how many people really sit down with you and educate you on filing taxes, how important your credit score is, what having a job means, and how important owning a home is going to put you ahead of for many people just based on the equity you save.
Yeah,
and it really puts you in a better position. And this is a great way for people to get their foot in that door, even if they didn't know before. And now they do, and now they're trying to do that.
Right, and like Renee say, I mean, there's so many different options out there for a client to qualify. Mm-hmm. This is just an additional way to help everybody who doesn't fit into the cookie cutter box.
Mm-hmm. Right.
Okay, let's see how we can fit you in this different box who may be a little more flexible, right? At the end of the day, yes, there's requirements.
Of course.
You have to have a job, right? You have to, if you're self-employed, hey, let's figure out your cash flow. Does it make sense?
Exactly.
If you're W-2, still, we can still put you in this because if it, for whatever reason, you cannot qualify for a traditional mortgage, non-traditional will help you. The good thing is that this non-traditional is not asking for 20% down or 15% down. It's only asking for 3.5% down. And that's, where the benefit comes in.
Yeah, I mean, there's all kinds of people like I met this guy that he gets paid, I think he gets paid W-2 part of it and then 1099 the other part of it.
Yeah.
So he makes good money.
How does that work?
That's what I'm trying to tell you. And so he makes good money at the end of the year, but technically half of it doesn't count because it's cash. Yeah. Unless he reports it and pays taxes on it. And you see what I'm saying? Right. So like this guy, the lifestyle, he makes great money. So he's going to want a matching house. Yeah. But he can't do it because technically half of his income is gone on paper. You see what I'm saying? So there's all kinds of people out there with all kinds of different situations. Hey, I've been doing Uber for the last 3 years, right? And I make good money at it. But, I'll be honest with you, man, I don't want to pay a lot of taxes. So, even my coffee get put on my taxes, you know what I mean?
I don't off everything.
So I don't have a big bill at the end of the year, you know what I mean? And I'm fine with that. Yeah. Here's the problem, buddy. You're fine with that. It works for your lifestyle. You're making money. You're legit, right? The problem is to go buy a house. Like Roberto says, once they do the numbers, what goes in, what comes out, you're left with $10,000 at the end of the year. I have to base a whole loan for a house off of the $10,000 left over after all your expenses.
Yeah,
exactly.
That's gonna be tough, bro. You know what I'm saying?
That's just a down payment.
Yeah,
just have enough for the down payment.
Yeah, that's what I'm saying. So this provides an option for this guy to do it a non-traditional way and say, hey, look, I understand. You guys can't see where all my money goes because. I'm telling you that, I buy 10 uniforms every month or whatever it is, right? I buy a lot of snacks for the people in my Uber, right? Whatever it is, right? You can't see that. But look, let me show you for 3 months, like he said, I'm going to show you my bank statements on how my money comes in and how my money comes out. And that you can't really fake. Either it's coming in or it's not coming in. You see what I'm saying?
I make consistent cash.
Yeah, I make consistent cash, And I just don't like to pay a lot of taxes, so I put a lot of expenses. Yeah. That works for my lifestyle. You know what I mean? But when I want to go borrow money from the big institutions, they're going to say, well, buddy, you don't make the way your balance sheet works. You don't make a lot of money. Yeah. You know what I mean?
Exactly. Where's your money?
Yeah, where's your money?
On paper, I'm broke.
And this provides an option, man. And like I said, if you're like, you just don't have your life together. Hey, look, I just met my girlfriend and hey, things are going good, but man, a 30-year mortgage with her, that we both want to sign up for that. You know what I mean? I don't know. How about we just give it a try, like for a couple years? I'm just telling you, bro. Like it could be. There's so many dynamics to this. It just opens up options, and then, like I said, you still 5 years later, you guys have a mutual breakup. Hey, you keep the equity still. It wasn't a whole waste. You know what I mean? Of money that whole time that you guys were renting and all this stuff.
Okay, and I do have a question for you, Roberto. With I-10, correct me if I'm wrong, right? Interest rates tend to be a little bit higher than traditional loans. Is it the same with this one?
That is correct.
Yeah.
But let me put it this way, right? So when I talk to a client and we're going to doing numbers, I always tell math doesn't lie. Math is math, and it doesn't like you or hate you.
Numbers don't lie.
It is what it is, right?
Yeah.
So I'm meeting with a client yesterday, and they're like, rates are really high. And I'm like, indeed they are.
So everybody's saying right.
So
Compared to 3 years ago, yes.
Yeah. Right. So I asked them, how much are you paying in rent? Because I had an apartment and I could see that I had an apartment. They're like $2,000. I said, okay. So let me reverse engineer what $2,000 would look like for a mortgage. And I did that. And then I showed them, for their loan was 7.5%, traditional loan. And I did it. And it was about, I think it was like 225, 240, something along those lines when I did the numbers. $2,000 mortgage payment. I said, this is what 7.5% interest look like. This is what 100% interest looks like. You rent.
Yeah.
And just that simple, it was just like light bulb for them. They're like, oh crap.
Look, at the end of the day, man, like if it's an investment.
Yeah.
All right.
Absolutely.
I mean, I love the quote. I don't know how I just ran into it, but this is like I'm gonna live by this now. And it says, buy real estate and wait. Don't wait to buy real estate. Right. And that's facts, man. I'm gonna start living by that. Like here's the thing, people, when we say go out and buy real estate and it's an investment, nobody's telling you to be house poor. That's why that term exists in our industry, house poor, meaning that you're gonna work only to pay this house off. Nobody's saying that. All right. We're saying, hey, do an analysis, you're paying $2,000 a month.
Yeah.
Add that up what 5 years of $2,000 a month is.
Yeah.
Right? Add it up. I'm trying to tell you, and you're gonna be like, whoa, I could have been, a fourth done with the house I wanted to buy. And that's the whole thing, man. Like, it's an investment. You're not only just, it's not just somewhere to live when you buy real estate, right? It's something that through time is gonna gain value. And if you play your cards right, it might help you out in life further down the road instead of just throwing it away.
Yeah.
You know what I mean? Because it's literally just giving it to them. I mean, you are paying for something. I get it. It's an exchange to it, right? But you're gonna pay it anyways. So why not get some value on top of it?
Absolutely.
You know what I mean? That's the way I see it. As simple as that.
That's one of the biggest hurdles that we as real estate agents have to go through, right? Objections with especially first time home buyers.
Yeah.
If in a scenario where I'm comfortable paying like $2,000 for rent, why should I have to go pay $200 or $300 more for a mortgage, for a 30-year mortgage? It's most of the time it's about us changing, like Roberto did with this person. Changes the way they're looking at it.
The mindset.
And then it clicks like, oh my God, never even thought about it that way. So it's more of a mindset shift at times depending on who you're dealing with. But first time home buyers, it tends to be like that.
When I say the word investment, I mean, to me, what comes into mind? To me, when I hear the word investment, I hear down the road. Like, you know what I mean? Like, I'm going to get the benefits of this down the road, right? And that's why homeownership, if you just go apples to apples, it goes, well, I could pay $2,000 here or pay $2,400 there. Why would I pay extra $400? It doesn't work like that, people. It's an investment.
You're looking at instant gratification towards delayed gratification.
Right. So let's do a quick analysis, like a really quick one. What do you do when you want to start your own company? You spend.
Oh,
you invest.
You invest into it, right?
Yeah.
Because you know that you're gonna build this company, right? But before you can build it, you need your tools, right, to be able to go do the job that you have to do. So you invest into it, and you might invest $2,000-$3,000 just on the small tools that you need. But if you don't have that, then you're never going to be able to do the work and get something back from it, right?
Yeah.
So there you go. So you invest. So to me, I used to hear the saying that you need to spend money to make money. But now you have to invest money to make money.
Yeah.
Because if you spend money and you didn't spend it correctly, it's wasted money. But if you invest it, then that's going to bring you something.
Yeah. And also I'll add is also invest in doing your research on what you're going to get into, whether it's starting a business or if you're going to start get on the path of home ownership. Educate yourself first on what you're getting into. Talk to a lender, talk to a real estate agent, see if how well off you are, to how good of a shape you are to be a homeowner, you know? So
remember you and I were having this conversation about Grant Cardone, you know, 10X, we have him right here. Good guy, great mentality, you know, highly successful, right? But he goes online and tells people home ownership is the worst investment you can do. You know what I mean? That's what he says. Hey, I understand what he's saying right now. I'm listening to an interview, Ricky Caruth is interviewing him. Remember I told you, shout out to Ricky Caruth, right? And he says, he's telling a story on, you know, how he became this guy that, you know, he wants to be the, you know, basically the biggest portfolio, real estate portfolio in the country, right? And how did this all come about? What's the origin, right? He goes, well, I bought a house. I sold the house, and with the equity from the house, I started buying commercial property. And I'm like, guy, like your whole thing was based on the equity from a residential home. And you're telling people don't buy a residential home. Like, like I understand what he's saying. There's other vehicles of investment that'll give you a higher ROI.
Yeah.
Correct, Grant Cardone, right? But if you're the regular guy that, you know, basically, you know, hey, you're check to check like most of America.
Yeah.
And since part of your check is going to go to, you know, where you're going to, you know, lay your head at night, you know, that part should be considered an investment. Absolutely. You see what I'm saying? And home ownership, I don't care what my man says, statistically, historically, if you look at real estate in the United States, it's one of the better tools of investment in this country. You know what I mean? Now, are there tough times? High inflation? Like, it's funny because to me, man, it's all relative, right? Like when you started off and you said, hey, they sat down with me like, yo, the rates are high. Well, yeah, because you didn't buy like your cousin did 3 years ago when rates were historically low. Yeah. You see what I'm saying? But if you have that conversation with my father, he'll tell you about how he bought his first property in 1986 and he bought it at 16% interest rate. Right now, the rates are 50% for him. Do you understand? He's getting 50% off on rates right now. Yeah. You see, that's the way he looks at it because, you know, this is all cyclical. People, what goes up must come down, goes back up. It's just about, you know, you trying to land somewhere where it makes sense for you, right? Yeah. You know, not time it. Nobody can. Warren Buffett can't time this stuff. You see what I'm saying?
What they say is more... it's better to be time in the market than trying to time the market. You can't just do it. If you look at your situation, look at your finances, are you in a position to be able to afford a house right now at this current interest rate and just hold off for 2 or 3 years while interest rates come down? If yes, why are you not doing it?
Yeah. Yeah.
If you're gonna wait for the perfect condition, like interest rates, prices, it's not gonna happen. And then when interest rates come down, when prices come down, right? It's not gonna happen at the same time. But then you are gonna be with the rest of like the 100,000s.
Everybody else is waiting.
Everybody
right
else
with
is
you.
waiting.
Yeah,
like they're gonna. Then you're gonna have competition, and then you're gonna be like, oh, I can't get a house. It's the same thing. Just if you can do it now. You're gonna be better off.
And that's why I was telling you, like, you know, nobody's telling people to be house poor, man. Yeah. You know, it has to make sense. Like, there's even terms for this in our industry. Roberto, I'll tell you, mortgage shock, right? Payment shock. Yeah. Like, you know, there's terms for this. Like, that's too much. Like, we get it. Nobody's saying do that. We're saying, does it make sense? Yes. And one of the things I see that, you know, in my experience, why people hesitate to buy real estate is because they want to start, like if you're playing Monopoly, they want to start with the hotels on Boardwalk. You see what I'm saying? That's not how you play the game, people.
You start off with the cheap properties.
They give you a little house and you might get an orange space, bro. You see what I'm saying? Like that's how the game is played. You know what I mean? And you have, if you want to play this game, that's how it's played. Like real estate, you got to start. You don't have to, but most people have to start at the bottom. Like start with something. Yeah. But something's better than nothing, man. Like yeah, man. Like people that were buying, you know, condos, right? If you bought a condo like 7 years ago, and you know, you look at it right now, man, you're loving life, bro. Yeah. You know what I mean? Now you have that peace that you can trade up if you want. You know what I mean? Or do whatever you want. But that's how you got to look at it. Like, look at it like the Monopoly. If you've ever played Monopoly, right? If you want to buy some real estate, play some Monopoly.
I was just going to say, like, you know, because reading Rich Dad Poor Dad, he talks about, you know, he came up with his own version of Monopoly.
Oh, yeah.
That'll teach you.
We should play that one day.
Yeah, we should. I never got the chance to buy it, but I was like, I'm going to buy that with cash flow with my daughter. Yeah, the cash flow game.
I have that, yeah.
I just think it's amazing because it's true. If you look at real estate,
Yeah.
the way Monopoly is played, and who hasn't played Monopoly?
Yeah.
That's how you should look at it because it'll give you a different perspective.
Yeah.
Absolutely.
Yeah, and I tell this to like the majority of my clients. The neighborhoods where I grew up around, so let's say Bladensburg, right? I know those historically, they went for like 30 years ago. They went for like about what 30, 60,
man.
$80,000.
Yeah.
And now you can't imagine how much 1 3-bedroom single family home will cost you.
Yeah, man.
Nothing below 400. If you want it nice, if you want a ready to move in house,
Yeah.
nothing
And
below
And
400.
we're talking that's within our lifetime.
This is within our life.
Yeah, this is not like, for young people, oh, that's too, like, no, man, like, like start investing, man. And that's what I'm saying, investing. There's some people, they're like, yo, but I'm good in my parents' basement, or my friend, he has a beautiful house. He rents me a room. I pay $500,
Yeah.
bro. I'm like, look, amazing. You're blessed. You know what I mean? But you know how many people would like to live in a house, bro? And you could buy it. You know what I mean? You don't buy it for yourself, man. Buy it to put it on the market. Like, you know what I mean? And rent it out.
Yeah.
Have somebody else pay the mortgage.
because-
but you're providing a home for
Yeah,
someone.
people have short vision.
Yeah.
They're not thinking. They're thinking short term. They're like, I'm fine right now
Yeah.
in the now.
Yeah.
They're not thinking like, 2 years from now or 3 years from now when I find a girlfriend. I love her a lot. We want
Yeah.
to start a home together. We want to start a life together. We want to get a home. And it's like, damn, I could have did this. I could have did this. I could have prepared myself 2-3 years ago.
Yeah.
Like, it's like, think about that. It's like people have short vision and they're not thinking about further down the road. And real estate can really set you up for
You know
for
what?
the
Success,
long run.
yeah.
You know what's funny is that when you're renting, a basement or whatever, and you're paying, let's say, $1,000. Notice how you pay $1,000 and you don't save the money because you spend the money. When you have a house, and now you're having to pay $2,500, you're able to pay $2,500.
Somehow.
I mean,
Somehow.
and yet, if you think about it, when you put yourself in a position to invest into buying a house, you may not be able to save or go party every weekend like you do when you're paying $1,000 in the apartment, right, or in the basement,
Lifestyle, man.
right? So you make changes, you tweak things,
Yeah.
but now you're saving money, even though you don't know you're saving money, because now the property is saving the money forcibly for you.
Yeah. A la
You know?
fuerza.
Yeah, a la fuerza.
Yeah.
That's the way it goes, and you're not realizing it. But like, damn, I don't have any money. Yeah, you do.
Yeah,
Yeah.
you do.
You just can't touch it yet.
Exactly.
You do what
Can't touch it
counts.
yet.
You know what I mean? How it's supposed to.
It's exactly what you cannot touch it yet, which is great because you're not gonna spend it.
Si no me lo como en tacos, me lo como yo.
Yeah,
Si lo tengo ahí, you know what I mean?
exactly.
Nah, man, that's just just nature.
I mean, well,
Human
like
nature.
people around our age, right? Like, my age, like early 20s,
Early
late
20s,
20s,
yeah.
they're not really thinking about.
I feel 'em.
They're not really thinking about like home ownership. They're thinking about like, cool, as long as I can make my rent and like I can go out from Friday and Saturday and party, I'm good.
As long as my car looks nice,
Yeah.
it runs great, and it's loud.
Yeah.
Nah, I get it.
But
I
then-
was there.
Yeah.
I was there.
Yeah.
I get it.
Yeah.
You know,
But
but I
then-
also didn't have a podcast telling me the truth.
Yeah.
You see what I'm saying? Like,
Exactly.
I'm just saying,
You
man.
didn't
You
have
know what I mean?
people, like in their 20s,
Yeah.
a little older.
Yeah.
Yeah.
Telling you exactly how things are, you know,
Like-
and it's great to be able to have the space to be able to talk about things that are real because we've been there.
Yeah, of course.
You guys are
Yeah.
are into it a little bit earlier than we probably were.
Yeah.
Yeah, definitely.
You know?
And even
Yeah.
I still feel like I got into real estate way later than I should have. But like it's good to hear that, we're still early despite of how we feel about it, or well, I feel about it. But it's good because, for example, we just closed on the deal. 22-year-old
Yeah.
bought his first house.
Yeah.
His mom helped him out, and just talking conversations I had with him, I was amazed. It was like it's good to see people that young people that not a lot, but they have that mentality of like, yo, I'm gonna grind now so I can enjoy later.
Absolutely.
Yeah,
It's
that's amazing.
a breath of fresh air when I meet another 22-year-old or like let's say at the gym and we start
Yeah,
having a
it's a young guy,
conversation and they're like, I started looking at real estate. Could you help me out in a little bit? Or I'm working this job so I can buy a house for my family. This and
Yeah.
that. That's such a
Yeah.
fresh breath.
And it's not their fault because, like, you know, I didn't learn anything that I have of the knowledge that I've acquired through
Yeah.
my
Yeah.
parents. I didn't. It's not their fault because they can only teach you what they know.
I hear you.
Exactly.
You know, and
The school system's not going to
yeah,
teach you.
and the school system didn't really teach you. It just teach you how to be an employee and, like,
Yeah.
you know, like,
The
you know,
basics,
cool.
you know?
Don't take risks. Risks are scary.
Yeah, exactly.
And if you want to be successful and achieve things that other people haven't achieved, you got to take risk and you got to be comfortable being uncomfortable.
Absolutely.
And that's what a lot of people of our generation aren't really. They're not really, you know, into it. They're not. They prefer the comfortable lifestyle, like, you know, party and then repeat the cycle. Work Monday through Friday, party, repeat the cycle.
Now we got to think about the future, man. And just to recap, Roberto Aleman is here from City Lending.
Yeah.
He's talking about the what is it?
Earn equity.
Earn equity program. And if any of the stuff we talked about applies to you, man, you're an entrepreneur. You're making the bucks. But right now you're not super organized, but you understand that you're also you're paying that $2,500 for that 2-bedroom, and you know that it doesn't make a lot of sense.
Yeah.
Like you're like, man, I could be paying a mortgage. Yes, you could.
Yeah.
You know what I mean? And this type of program, it allows, like I said, people that are not the traditional home buyer to reap all the benefits of home ownership with flexibility on top of that, which is, in my opinion, amazing. Right? So obviously, yes, you're special. So you're going to get a special rate. You know what I mean?
Yeah.
But at the end of the day, do the math. Like I said, what's the math on it? You're paying $2,500 there. This is $2,650. That's a no-brainer, buddy. You know what I mean? The place you want comes out to $4,000 a month. You probably don't want to do that. You know what I mean? It's just the math is math, and like Roberto says. But amazing program. Someone that's listening applies to you. Reach out. If you know somebody, right?
So
that this applies to, reach out.
let's go down the list. So what do you need? You need to be employed for at least 2 years.
Right. So you need to have employment.
Is it 2 years, 1 year? Is this
Well, if you're W-2, you need, regardless, you need a 2-year history.
okay?
Okay. So if you were self-employed and now you're W-2'd, that's fine. You know, as long as you've been W-2 for a year, we're good. If you're self-employed, and you just started, but you have a 2-year history in the same line of work, we're good. So it's, I always say that when we create a loan for you, it's specific for you, because what works for one client definitely is not going to work for the other one. Let's say that I have a 740 credit score, very vanilla client who W-2'd, has all his money, everything's verifiable. I'm not going to put that client into this program because obviously we'll do a traditional loan for him, right?
Yeah.
But a client can be making the same amount of money, just not reporting it in paper, And, it's a little different that we were going to structure it. We'll build that loan for him and present it, a couple options, and then take it from there. So we need employment. We need credit. Maybe there's options where you don't have to have credit as long as we have the ability to create what's called alternative credit, which is you paying your bills on time, for example, insurance for your car, the internet, the electricity, whatever things you pay on time, we'll verify it for 24 months. And if we only have 12, there's an exception to that as well. So there's a lot of different ways that we can go about, but credit, income, money. You have to have savings.
Yeah, I think Carlos, something that I noticed is that from someone that's doing their own thing, they're a fireman or whatever. They don't real estate mortgage. That's not in their realm, right? I see that person looks at this process like they're applying for a credit card.
Yeah.
And they're either going to get approved or denied. You got to understand, when you do that, that's online. You don't know who you're talking to. A loan officer can understand your situation.
Yeah.
Right. And maybe you can't get that credit card, right? But we can apply you for this credit card. You know what I mean? And when you're talking about a mortgage, that's kind of how it is. Like, there's someone looking at your file, looking at your finances, that's going to work together with you. They're on your team.
Yeah.
You see what I'm saying? It's not they're not the greedy bank.
They're not there to judge you. They're not here to tell you like, yo, why are you so irresponsible? They're here to understand you and help you, and to help you achieve what you're trying to do, which is home ownership. So if you feel like this would be a program or something that's up your alley, please don't hesitate. Reach out to us. Reach out to Roberto. And like he said, everybody's situation is unique. So that's why you should reach out to them. So him and his team could put something together, tailor-made for your situation, and help you get into homeownership.
Yeah, man.
Yeah, no, absolutely. I think that each client is unique.
Yeah.
And, we have to look at the whole picture to be able to come up with a plan.
Yeah.
And I always say it's not if you can buy, but when
Yes.
you can
When
buy.
you can buy.
Yeah.
Because if you're not ready now, we'll set you in the right path.
Yeah.
So maybe 3 months, maybe 6 months, however long it takes you.
Heck, maybe a year.
Yeah.
That's fine.
I think that's fine. I think people need to look at it like that. Like maybe we need to do a better job of displaying this to the public, that real estate is customizable.
Absolutely.
You see what I'm saying? It's not a one size fits all for everyone. You know what I mean? So it's customizable, and let the professionals customize a plan for you, and that's either going to work or it's not. You know what I mean? At the end of the day. So
Yeah, no, I always tell the clients, when you come sit down with me, I'm kind of your priest. You're going to have to confess everything. That and let me fix you after that.
yeah, man, it's all how you want to look at it, man. But definitely, people, do your research. You know that real estate homeownership is definitely a great vehicle of investment.
Absolutely.
If you're not looking at it, because I know there's people like I was at a point where I was making good money when I was younger. No kids, no wife. You know what I mean? Making good money.
Yeah.
Right. Making trips and all this stuff. But I did think to myself, like, man, like I should be putting this money into something, you know what I mean? And if you're, if that's where you are, like you're making good money, like we're working with a client right now. She's making good money. I think she owns a couple of like Metro PCS
Right,
places
exactly,
or whatever. But see, she's got money coming in, but her situation's tough. She's trying to get businesses off the ground and all that. But she has a family that she needs to look out for, and she knows, hey, I can't be paid. She's smart. She's like, I can't be paying this amount. Like, I need to invest in a home. You know what I mean? So, like, everybody from all different types of walks of life, man. So that's what we're here for, though. We're puzzle, solvers. We take all the pieces that you give us, and we try to put the puzzle together for you and see if that makes sense,
Yeah.
So,
Sometimes a little duct tape and sometimes even a little piece of glue.
hey, man, you might need it. You might need it. Here's the thing. Like Carlos says, no judgment. You might need it right now. Bro, if you looked at my credit score when I was in the early 20s, nah, man, that wasn't the move. You know what I mean? So at that point, I needed some help.
Yeah.
You know what I mean? Now, thank God I can go for a traditional mortgage, get the better rate.
Yeah.
You know what I mean? So, and that's the thing that stops people from the start, right? They go, oh, well, I'm gonna get a higher rate, so I'm not even gonna do it. How do you know what that higher rate translates to? You don't even know what that means.
Yeah.
Like, sit down with a professional, see what that really means on a monthly term for you.
Yeah.
You know what I mean? You might be excluding yourself over $89 a month. You see what I'm saying? Just because you can't get the best rate, but you can get a house though.
And look, man, things aren't getting any cheaper.
Yeah.
Rents aren't going down. Groceries aren't going cheaper either. So this is a great way to combat that inflation. Have some money saved for you. For hard times.
Correct. That's way to hedge.
And the best thing is it won't cost you nothing.
That's the craziest thing, right, Carlos?
Yeah.
I
It
always
won't
tell
cost
Carlos
you
this, man.
nothing.
I gotta start charging, bro. We gotta start charging, man. Like
All of this knowledge is available for free. All you have to do is call the number on the screen.
But not bad. It was right, man. For the last couple of years, how long are we going?
We're
43
time. We have 43 minutes.
43. Just this on the podcast.
Yeah.
Wow. Okay.
Yeah.
Maybe wrap it up soon.
Yeah. Let's
All right.
wrap it up.
But yeah, the way the naysayers for the last couple of years, the market's gonna crash. The market's gonna crash. Nobody knows. Hey, I think this is just a new ceiling, like a new floor. I mean, you know what I mean? A new floor, and people are like, oh, no, man. I think house prices are what they are. Interest rates are what they are. So the best thing you could do is get in on the fun. You know what I mean? Buy yourself a property that makes sense to you at a payment that makes sense to you, and wait 5 years and then talk to me. You know what I mean?
Yeah.
So I follow Barry Habib, who's a very brilliant person, from my point of view, and he talks to us, the group that follows him. And last year, social media, that the media was saying, oh, the ball's about to burst.
Oh yeah.
Homes are going down, and scare a lot of people off.
Yep.
Okay, those same people who didn't buy a year ago are kicking themselves right now.
Yeah.
Oh man,
Because
I know
they listened to social media and to the media as a whole.
Yeah. People that don't sell houses,
Right.
or do mortgages,
Right, exactly. And they'll grab the news, economic news that come any which way. It's all up to interpretation, right? Like anything else. So what has happened in the last 12 months, if you look at it, is that prior to the last, I'll say last 6 months, we're seeing homes appreciate anywhere from 10 up to 20% in the metro area annually. Now we're going back to the normal cycles, which were about 5% average.
5, yeah.
Right. So, yeah, it has come down. Okay. But homes have not come down in value. What came down was the fast appreciation that we had seen, which I don't know about you guys, but I'm glad that it has slowed down because the way it was going, you weren't going to be able to, to afford a townhouse.
We would be California.
Yeah, pretty much. You know
what I mean?
And so, I'm actually glad that it is normalized.
Yeah.
To me, this is the normal way that it should have been.
Yeah.
And we're going to continue to see this, 3 to 5, we'll say 3 to 5% appreciation every year.
Yeah.
When we finish this year, we are going to finish anywhere from 6 to 7% is what's projected for 2023 in the metro area. Some areas are going to be higher than that. Some are going to be lower, but that's the average. Still, 5% of $300,000 is $15,000 that you got for the simple fact of being a homeowner.
Yeah. Our broker Matt does this presentation where he shows people appreciation of a home over X amount of years. Yeah. And he's like, one of his taglines, he says, I'm going to show you how you can become a millionaire.
Yeah.
And over the course of those 30 years, if you were to just stay in that house and it appreciates, he uses like 4 or 5%.
He wasn't wrong.
By the end of you paying off the house for over the 30-year lifespan, the house will be worth over $1 million, if not close, over $1 million.
Absolutely.
Yeah.
So it's amazing, but a lot of people don't see it that way. Like I said, it goes back to people looking at home ownership the wrong way.
Right. Short term versus long term.
Yeah, exactly. So any closing thoughts, fellas? This was an amazing podcast.
Lots of information.
Yes, lots
just
of information.
I don't know if we did a great job of letting Roberto explain the program, but if you want more information, reach out to him. We'll put his information up. Reach out to us. But it's definitely a program that gives flexibility. If you're in a situation like that, if you're not the traditional person, but you're a hustler, you make money, you're responsible with your bills. Hey, give us a call, man. We'll try to figure it out for you, and that's just a great option. And I guess the rent to own is back. If there's any house out there you like, we can make it rent to own for you, man.
This is the 2023 rent to own program. If anything, it's a new program, new way to be able to get into the house with like you said, a lot of flexibility, with best of both worlds. Of being able to be in the house and have equity in it and be able to leave whenever you want.
Yeah, that's amazing, man.
Giving everybody a fighting chance to get their foot in that door.
Yeah. That's how. Hey, a great way to cap it off, bro. That's literally what these programs do. Is just give everybody a chance. So it's not just the cream of the crop getting a house. Hey, look, at the end of the day, we all have families. We have people that we care about and we want to look out for and make good investments for, man. So that's what we're here for, to help you out.
Yep, I agree, 100%. All the socials will be linked in the description, and I will put Roberto's information in the description as well. And Roberto, close us off.
Close us off, bud.
Sure. Earn equity is here, like you said. The idea of this program is to open the door to homeownership, whether you're just starting to get ready, whether you want our help becoming ready, or if you're ready and you don't know that you're ready, come talk to us. We have a wealth of knowledge between, the group that we have here. So the only wrong thing you can do is not approach us and seek the information, seek the knowledge that we have for you. Let's share it. We don't charge you anything for sharing the knowledge.
Yes,
So
of course.
come, let's take a look at what we can do to help you become a homeowner.